This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
A very good afternoon, everyone. Live on Bloomberg Television, radio, streaming on YouTube and Bloomberg Originals. It is Bloomberg Businessweek Daily. On this Tuesday, May 26, 2026, I'm Tim Stenivek. And that is not Carol Masser. In for Carol Masser is Alexandra Semenova.
I have big shoes to fill.
You do have big shoes to fill, but we love it when you join us, and we love it, especially on a day when we could see another record for the S&P 500.
Yeah, and it's worth pointing out, Tim, too, we've been talking a lot about market concentration, how everything is just led by this rally in tech, but the S&P equal weight is actually also trading at a record high right now. So really significant given the fact this is, of course, the version of the benchmark that gives the same weighting to a company like NVIDIA as it does to Campbell.
We're going to have more from on the markets from Charlie Pellet in just a minute. In the meantime, Alex did mention what the S&P 500 equal weight is doing. Wall Street kicking off, though, this holiday shortened trading week, stocks and bonds higher, all emanating from hopes of a peace deal. We're going to have more from Charlie in just a minute. We'll also have more on a peace deal, how to interpret the conflicting signals out of the Middle East and out of Washington. Bloomberg Economics economic statecraft lead joins us in just a minute. Also, the closure of the Strait of Hormuz really changing the affordability picture for many Americans. We're going to spend a good portion of today's program really focused on affordability. Alex, we got Peter Atwater of William & Mary joining us in just a few minutes. I'll talk slipping consumer confidence. We're going to talk about higher food prices and sort of the outlook for food prices. That's going to be with Wells Fargo's Agri-Food Institute's chief agricultural economist. And then on affordability, maybe a stretch here for many Americans, but buying an apartment here in New York City. Louise Phillips Forbes is going to be joining us from Brown Harris Stevens a little later, too.
Yeah, really incredible that rent prices have gone nothing but up, and yet the demand is still so high. I'm watching TikToks of people just lining up.
Can you believe those?
They're bidding for apartments. It's crazy.
Yeah, it's really crazy. The mayor certainly has his work cut out for him. We're going to talk about that, too. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, check of the day's trade and top business stories. Here he is, Charlie Pellet.
Hi, thank you very much, Tim and Alex. And here's what's going on. Dow, just about the low of the day right now, while the S&P 500 index, you guys were talking about a record there, but a pullback for the Dow, down now by almost 200 points, a drop there of just about 0.4%. We do have the Dow Jones Industrial Average being led lower by Chevron, shares of United Health and Cisco. Again, Dow right now down by 0.4%, down by 201 points. S&P 500 index 7506, up 32. That is a gain of 0.4%, while NASDAQ is advancing 230 now, up by 0.9%. The VIX holding above 17, just above 17 to be sure. The 10-year 4.50%, the 2-year 4.05%, and the 30-year 5.03%. Spot gold is down 1.8%, $44.86 the ounce, while West Texas Intermediate crude, interesting day there. We do have WTI lower, $94 a barrel, just below now, but a barrel of Brent, yes, below $100 a barrel, but still trading higher. Brent up by 3.9%. The oil majors are lower. ExxonMobil down 2.9%. Chevron is down 3.2%. ConocoPhillips right now down by 3.1%. Again, recapping, S&P 500 index could see a record close up 33, gain there of 0.4%. Alex and Tim, that is up Bloomberg Business.
Hey, thanks for that update, Charlie. Charlie laying out the oil picture, the complicated oil picture, really well just now. Of course, all of that emanating from the latest in the Middle East. U.S. and Iranian forces clashing near the Strait of Hormuz overnight, highlighting the tension between the two sides, even as they tout progress toward an interim peace deal. I want to bring in Chris Kennedy, economic statecraft lead for Bloomberg Economics. He joins us from Bloomberg's Washington bureau. Chris, good to have you on the program. A lot of developments over this 3-day weekend. Different signals coming from Washington, different signals coming from social media, from the president's account, and different signals coming from the leaders of Iran as well. Where are we right now?
So a lot of action, Tim, over the weekend. I would say that our assessment is we're pretty much where we were before the weekend started. I think what we're seeing is a new set of constraints emerge that are preventing us from getting to something that can permanently or at least temporarily open the Strait of Hormuz and provide a level of confidence to global oil traders and vessel owners that they can re-enter the oil trade in the region. And that's coming from congressional Republicans who, as they start to see some of the details of what Iran is demanding to agree to a temporary reopening, they're not liking what they're seeing, right? They're looking back to the deal in 2015 and comparing it to those conditions, and this is putting pressure on the president.
Chris, we've heard the White House say time and time again that we are getting closer to a deal. What makes this time different? Is there anything more promising as they say that we're going to reopen the strait?
Well, I think that there is pressure building in the global energy system. We saw, record drawdowns of U.S. oil stockpiles last week. And I think that is putting real pressure on the president to try to get to a deal sooner. So I would say that is a positive sign that we might get to something. But at the same time, the two sides are still very far apart on key details, including the disposition of Iran's nuclear material, the conditions under which transit will be allowed to restart through the strait, whether Iran will have a say or be able to collect fees. And again, now we're seeing this question around compensation for Iran, as they put it. But what it means is sanctions relief and also the unfreezing of assets. And that is emerging as a real sensitive issue for the president as he tries to sell this on Capitol Hill.
Yeah, okay, so I want to go there, Chris, and I'm glad you brought up the JCPOA, the so-called Iran nuclear deal that the president abandoned, I think it's fair to say, in his first term in office. How should we look at, it's hard to say, I don't want to put the cart before the horse because there is no deal at this point, but how should we look at that deal, not as a framework, but as sort of a reference point for what the U.S. and Iran could agree to?
Yeah, well, I think, going back, it's interesting because now we are starting to see some of these details emerge over what an MOU or Memorandum of Understanding would entail between Iran and the U.S. And we are seeing it touch on some of the same issues and run into the same roadblocks. So, this was a very hard fought deal on all sides back in 2015. And I think the U.S. believed they got as far as they could go. And I do think it makes sense to keep that in mind as the Trump administration pushes here. So what was Iran willing to give up back then? Well, they were willing to submit themselves to significant oversight from international bodies on their enrichment capabilities. There were some assets that were unlocked, and we're seeing the same discussions play out again. Now, this makes it very difficult because, of course, President Trump has disparaged that deal and said that he can get a much better deal. And to me, and to us at Bloomberg Economics, that puts a real sort of constraint on the ability for the president to compromise as he tries to reopen the strait temporarily and then, again, get to a durable place where we feel like we're making progress on some of these issues that have yet to be resolved.
Chris, we have the U.S. midterm elections coming up, of course. How is that calculus playing into Trump's decision-making, especially given the fact that stocks are at record highs? We've had higher gas prices for quite some time. That hasn't seemed to move him. How is he thinking about elections?
That's the question of the day. So certainly Republicans on Capitol Hill are thinking about the midterm elections. And certainly some of Trump's political advisors are thinking about them. I think there is a question, the extent to which Trump is personally thinking about midterm elections, at least at this moment, seems to be primarily focused on primaries. But, we're clearly entering a pretty tough environment for Republicans. Gas prices are high. There's no sign that gas prices are going to come down in the near term. Even if we get a deal that reopens the strait, it will take months for the global energy system to normalize. And so, how the extent to which the president is thinking about this, I think, is to be determined. But you can bet he's getting a lot of pressure from the Hill.
Chris Kennedy, thanks for joining us right at the great way to kick off our program this afternoon. Chris is economic statecraft lead for Bloomberg Economics, joining us from the Bloomberg Washington Bureau. Well, the closure of the strait driving energy prices higher, as well as derivatives of energy higher. We're going to talk a little later about higher food prices as a result of the closure of the strait. That's hitting U.S. consumer confidence. It edged down in May. Views of current economic conditions settling back amid rising prices due to the war in Iran. The most recent report that we got this morning adds to evidence of growing anxiety among American consumers about the high cost of living, the recent spike in fuel prices, particularly challenging for lower income households despite a largely stable labor market, and few signs of broad layoffs. When we talk about sentiment, we talk to Peter Atwater. He's president of Financial Insyghts. He's also adjunct lecturer of economics at the College of William and Mary. He joins us on set in the Bloomberg Businessweek studio. Peter, I think a lot of people know you as the K-shape guy. And nowadays, we hear about this from everyone, whether we're talking to executives or executives are talking about earnings calls, or we're talking to analysts or investors here on our program. It's not getting any better. In fact, it's getting worse.
Yeah, and in fact, it's no longer a straight line K. The arm of the K looks almost parabolic, and the leg is turning almost straight down into despair. And so the divide between those at the top and bottom isn't just economic at this point. It's almost become two life experiences that bear nothing in common. And I worry that those at the top are doing all they can not to see those at the bottom. But in a world of social media, those at the bottom can't help but see this enormous overabundance that exists above them.
I want to get more into that. There was a great piece in The Atlantic this weekend. The vibe session is over. The perma session is here. It spoke about how households are feeling worse about their finances and the economy than they did back in 1970 during great inflation. So you talk also a lot about the confidence gap. How much does the pullback from lower end consumers have to do with the fact that they just don't see any upward mobility?
It's not only that they don't see any upward mobility. The AI boom has now put a target on their back. They believe that it's a zero-sum game, and they're looking at all of these gains being made in AI stocks and believing that ultimately it will come at their expense. And so a lot of this has to do with how both groups imagine the future. And the imagination of the future could not be more divided in terms of extraordinary optimism at the top and this dire level of despair at the bottom. And it's the despair that troubles me, because I know that ultimately that is what sets people into the streets.
Are you seeing, I want to talk about those people and the repercussions of this or the ramifications of this in a minute. But before we do that, just we hear so much about the resilience of the American consumer. And I hear what you're saying about despair and that bottom rung of the K. But are we seeing an uptick in people missing car payments? Are we seeing people spend a certain demographics, put a different type of payment on their credit card? We talked to the folks at the Buy Now Pay Later firm, and they have their client is the average American, and they say the average American is doing so well right now.
Yeah. So if I look at credit card delinquencies, which this month look like they're going to come in at about 13%. What is so striking to me is if you look at it mathematically, that level is historically high. But it comes at a time when within the card portfolio, you have enormous convenience balances that are absolutely riskless for the card issuer. And so on their own, I suspect that the quality that the card issuers are seeing among their lowest tier is distressful. And the challenge right now, Tim, is that we have this bifurcation where not only are businesses like the airlines dependent on the top, but I see so many derivatives of wealth, including our banking system, that require at this point those at the top to continue to do extraordinarily well. It's fascinating to me that a bank like JP Morgan, at the bottom of the financial crisis, there were about $3 worth of credit card balances to private banking balances. Today, the lines have crossed. They have more credit outstanding to private clients than they do to Main Street credit card holders. So there's been an enormous wave of credit extended to those at the top with the belief that they will never default. I think that when you see so much of our economic system now dependent on those at the top, it begins to beg that question.
This bifurcation, Peter, has been a problem for years now and seems to only be getting worse, as you just mentioned. What can policymakers do to remedy this? And if they don't step in, what is the worst case scenario?
I think policymakers need to be thinking about the needs at the bottom of the hierarchy. We know that food insecurity is an issue that leads people to protest and riot. We know that basic health care is financially debilitating to those at the bottom. And so I think we need to be thinking about the basic needs and ensuring that there is a safety net. And I think of it as a social safety net that prevents despair from setting in. And I think that we need to be cognizant of the fact that there is a growing population that feel hopeless. And that hopelessness ultimately leads to action.
Well, what kind of action? I think a lot of people watching this, especially on primary day in Texas, and as we do get into the midterms, would think that there are electoral consequences. And certainly that was a lot of the navel-gazing that we saw post 2016 election. But what are ramifications of this?
So the ramifications, if you go back to the fall, to me it was no coincidence that in the midst of this affordability crisis that everybody was talking about, you saw a more populist mayor elected here in New York, who resonated both left and right. One of the things that is so telling about this latest consumer sentiment data is that for the first time, we have a meaningful drop in confidence among Republicans. And so the bottom is purple. It's not red or blue. And so that purple wants change. And candidly, neither party has done anything to suggest that they have action in place to serve those at the bottom.
So do the people at the bottom have to be served through political action, or is there a way for this to be solved without Washington's help?
I think you're seeing it on a local level first, as I would expect. And ultimately, those changes on a local level lead to national change.
So local, like New York City and Zohran Mamdani, our newish mayor.
Yeah.
Where else?
So I think we're going to see examples of that this fall, where you have incumbents on both the left and right who are voted out. And I think it's quite interesting in some of the political ads, incumbents aren't even talking about the fact that they're incumbents.
Like
because they know that it's
governor of California, someone like Steve Hilton coming in, or mayor of Los Angeles, someone like Spencer Pratt coming in, for example. Yeah. Is that what you're talking about?
It'll start at a local level.
Okay. Interesting.
And part of that is every crisis is local. And politics are incredibly local when confidence is low. And so that's where it's tangible, it's immediate, it's proximate. And so those are where people demand change first.
I'm really interested, Peter, in this idea that you mention of America becoming more of an ownership economy, where more and more goes to the people who already own homes, who already own financial assets. Can you talk a little bit more about how this incredible run in AI companies is worsening that?
Yeah, so you have beneficiaries of asset inflation, and it's hard not to see it, and it driving everything from Knicks tickets to airline seats. Owners of assets today have choices and opportunities that those below don't. And I think that for every owner, there is a renter. There is, somebody with a car payment, somebody with a credit card payment. So you have those that are, in essence, extending credit, extending opportunity, and those who are on the other side of it. And the gap to move from one to the other is it's too wide and it's too costly. You look at the average rate on a credit card, 20-some%. Well, to pay that off first, to begin that upward migration is all but impossible.
We're speaking with Peter Atwater, president of Financial Insyghts. He's a lecturer of economics at William and Mary. He's also the author of The Confidence Map, Charting a Path from Chaos to Clarity. Peter, let's end with the investment thesis in an environment, in a world where the Ks are sort of going parabolic in the other directions. We're speaking to you on a day where the S&P 500 could finish again at a new record. Doesn't seem like this idea of a weakening bottom rung of the K is holding back investment in AI, as Alex mentioned. What are the investment ramifications of society like this?
The investment ramifications are that there is an overinvestment in this abstract technology that we crave when confidence is extremely high. We imagine this unlimited opportunity in futuristic technology at every peak in confidence. And then there comes the backlash. And in this case, I expect the backlash to AI to only grow. And I think those at the top, particularly the proponents of AI, fail to appreciate the zero sum that is seen by those at the bottom. And the higher the market goes, the more those at the bottom feel that ultimately they will pay the price. Because to sustain that earnings growth, it has to come somewhere. And the most obvious target is labor.
Peter Atwater, always a thoughtful conversation when you join us here on Bloomberg Businessweek Daily. Peter's president of Financial Insyghts. He's an adjunct lecturer of economics at the College of William and Mary. He's also the author of the book, The Confidence Map, Charting a Path from Chaos to Clarity. Let's head on over to the Bloomberg Businessweek studio. That's where Charlie Pellet is standing by with a look at the markets. Hey, Charlie.
Well, hello there, Tim. We are looking at a down day for the Dow Jones Industrial Average, just about session lows, down 168 right now. A drop for the Dow of 0.3%. But this on a day when the S&P 500 index is pushing higher at 75.15, a gain there of 42 points, up by about 0.6%. NASDAQ up 279, could see a record for NASDAQ today, advancing by 1.1%. All of this with the VIX now below 17, the 10-year at 4.50%, the 2-year 4.05%, and the 30-year 5.03%. Gold at 44.90 the ounce, spot gold down 1.7%, while West Texas Intermediate crude oil, interesting story today, 93.94 for a barrel of WTI. So bottom line here, yes, lower by 2.8%, yes, below $94 a barrel. But while WTI is down, Brent continues to advance, holding below $100 a barrel, 99.57. But even so, barrel of Brent crude up now by about 3.8%. So Wall Street kicking off a holiday shortened trading week with stocks joining bonds higher as hopes for a peace deal between the U.S. and Iran overshadow those military strikes in the Persian Gulf. Knicks win. Shares of Madison Square Garden Sports are at a record. Right now we are looking at shares of MSGS, that is the ticker for Madison Square Garden Sports, up 2.7%. We got the Knicks advancing to the NBA Finals for the first time since 1999. Again, MSGS, that's the ticker, up by 2.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Alex and Tim, that is a Bloomberg Business Flash.
Hey, thanks, Charlie. Appreciate that. Well, this story from the Wall Street Journal getting our attention this afternoon. Peter Atwater mentioning Mayor Zohran Mamdani. Well, that mayor is set to announce a new plan to help rescue some of the most distressed rent-stabilized landlords, including allowing eligible apartment owners to charge a one-time rent increase on certain empty units. So there's that. And then there's the reporting last week that we got that a proposal to levy a new tax on all cash real estate transactions over $1 million here in New York is likely to be dropped from the state budget. For an update on all things NYC and real estate, we bring back Louise Phillips Forbes. She's an associate real estate broker over at Brown Harris Stevens. She's been in the industry for more than 3 decades. She's transacted more than $6 billion in sales. She joins us here in the Bloomberg Businessweek studio. How are you?
I'm great. Thanks for having me.
Yeah, welcome back. Spring, okay.
Ooh,
summer
hot.
Off to a good start.
Yes.
Things are hot. How hot?
I mean,
and where are they hot?
All over the city. I mean, look, the real estate as predicted at the end of the year. I was here at the end of the year saying it's going to be on fire first quarter, probably second quarter. Despite the war, people are absolutely committed to making decisions and purchasing. You see 3 million and above doubled in transactions in the first quarter, and you see up to 40 people. You mentioned it, I heard you earlier about like there are 40 people standing around for open houses in some cases. And I literally was showing in Brooklyn, and literally every single apartment I showed, they were like, best and final is on Tuesday. We have 7 offers. So it's interesting, and that's like a certain niche of the markets, whether it's under 3 million or even lower. But I just think it's really interesting given interest rates have popped up, the conversations around the pied-a-terre tax, which I'm sure we will talk about a little bit, and this cash proposed tax has got people talking but not hesitating in their actions.
Do you see a breaking point where prices will get too high because they've gotten exorbitant and it doesn't seem to have brought down demand at all?
Not to date. I mean, first of all, we have been anticipating a lack of inventory for some time, and you got to realize that New York City's vertical market, unlike the tri-states or other places across the country, urban environments react and respond differently to, even if I'm going to even still talk about COVID, but our recovery has just been different. And so our lack of inventory on top of policies that were made in 2019 have affected what we're experiencing today in the rental market as well as the sales market.
I want to go back to what you said about the potential tax on all cash transactions. These all cash transactions, more than 60% of the nearly 18,000 transactions in New York City in the first 6 months of 2025. That's according to data compiled by the nonprofit Center for NYC Neighborhoods. This idea of a tax faced pushback broadly from different constituencies, including real estate brokers. Right. The thing is, people who take out a mortgage have to pay a tax, like the mortgage recording tax too.
If it's a condo, not in a co-op.
Not in a co-op. Okay.
And
again, or if
it's
a house too, right? A
correct.
Single-family home.
Real property.
Okay.
The difference between buying shares in a co-op would be the houses or condominiums, which are reall property.
Do you think there needs to be parity in terms of the tax structure? Like, it does seem like people who pay all cash get an advantage, a tax advantage.
Listen, a lot of those cash transactions, if you think about first-time buyers, parents are helping facilitate those things. And sometimes they are actually the bank, the institution. They're holding the mortgage. And they get to forgive the interest payments for those kids if they choose to. But I think that when you're dealing with people who have the luxury to pay $3 million cash, they'll take a mortgage out. They'll take a small mortgage out just to beat the game. So accountants will help advise those individuals. So it seems like policy always does drive behavior one way or another. And we're experiencing cash in our market for several years. And I don't think that's going to change. I just think how it's interpreted is going to change.
Okay.
I have a pressing question for you, Louise. Something that I've been wondering is, a little bit ago now, brokers' fees were removed from rents, and that was supposed to provide relief to people who are seeking a home in New York City, but it kind of feels like they've just been baked into prices. Do we have a sense of...
This was exactly what the industry was trying to have the conversations with all of those city council and the assembly parties to try to have a conversation about really what is the unintentional consequences and those kinds. I mean, overnight rentals went up 11% conservatively. And I think also when you get into these pied-a-terre taxes and some other conversations, you're going to find policies for buildings are going to start allowing short-term rentals just for that opportunity to beat the system, if you will.
Is it fair to say that renters are ultimately paying more after this?
Absolutely. Absolutely. And by the way, the idea was to have transparency and to, push the landlords. That the goal was to have the landlords pay, but the landlords have the luxury to say, you want to live here, this is what it's going to cost.
We're speaking with Louise Phillips Forbes, associate real estate broker over at Brown Harris Stevens. She joins us here in the Bloomberg Businessweek studio. Let's talk about the pied-a-terre tax. This is different than the other proposed tax. There's a lot of taxes to keep track of. This would be second homes in the state budget. Has not been finalized. City and state officials say it would affect roughly 10,000 properties worth more than $5 million citywide and yield $500 million in additional revenue for the city in the coming fiscal year. I sell all of those. You sell pied-a-terres that are valued over that.
Yep.
What are you hearing from potential buyers about that? Are they pushing back at all? Are they complaining to you? What are they saying?
The reality is that it is going to pass when you have the governor standing behind it. The implementation of it is what is going to be so challenging. You got to realize that when you're looking at Ken Griffith's pied-a-terre, since that was in the news, that assessed value is based on the rental market. So a $240 million apartment, how do you quantify that for a rental?
Meaning it's looked at in what sense? Like you're not looking at it from the assessment value?
You're not looking at it from the actual hard cost. You're going after people that are paying $5 million and above for second homes. And therefore, how are you quantifying that when the assessed value is based on about 45%?
You have to explain what that means for non-New Yorkers who don't pay property taxes.
What that means is that sometimes transactions are based on sales, the price of a sale. New York has 4 different classes of how you're paying for 1 to 3 family townhouses, condominiums, the luxury market, then you have the co-ops, and then you have commercial. Commercial is taxed the highest. But that, for the residential piece of it, I think one of the things that we're going to find is the implementation of it. Co-ops have one tax bill. So I happen to sell somebody a $5 million apartment in a co-op. So are you going to tax the co-op? How is that going to be okay? And I think you're going to have a lot of legal arguments around this.
Interesting. So the implementation is the challenge because of the assessment.
It's not the policy. I mean, listen, policy affects behavior all the time, but the unintentional consequences around that, let's look at the Rent Stabilization Fair Act that happened in 2019. It is now the direct result of no new conversions. None. Zilch. So that new product is not happening, which is housing. Whether it's affordable or not, it is housing. And those that can afford are taking away from those who cannot afford if they can't buy what they're looking to buy. So I just feel that the collaboration between the industry, I just think that it's just short-sighted. It could be much more collaborative and think about those pied-a-terre people, if they are individuals that are bringing massive business and employment and they're spending, we are still the mecca around the world for the tech scene and fashion and culture. And, it just seems to me that it's too aggressive as opposed to being collaborative in a solution. And I'm not sure how they're going to collect it.
We were talking about earlier people lining up to view homes and this insatiable demand for New York City real estate. How are bidding wars reshaping the market? Are they making prices broadly higher?
Absolutely. You can see the days on market lessening. You can see that when it is actually still sitting on the market for more than 30 or 60 days, it's actually not because of interest rates. It's the pricing. And it is really interesting to have and consult an owner to be bold enough to put something on the market $100,000 less than what they're wanting, but they may actually get $150,000 if they strategically price that way.
Foreign money. What are you seeing?
I'm seeing some more than I did last year.
Okay.
But I think that is distressed distressed individuals, meaning they're looking at their getting a placeholder of assets.
Where are they from? Where's the money coming from?
Have a lot from Korea, a lot from, you have some Ukrainian, and I think that, normally we have Italy and Mexico and people that are looking to educate their children here coming, and that lessened, but now that's starting to trickle back.
Yeah, the immigration question and what's happening at universities is part of this. Just 30 seconds before you go, the hottest part of the market, not geographically in New York, you can answer that too, but sort of like where it falls in terms of how much the apartments cost or the homes cost.
I think we have a lot of pressure on areas from 3 million and below, and then the high ultra luxury, if you can get it, if you can find it, stuff that's selling off market, because there's just not been, people are trying to make those changes, and they are exempt from the stress of what's really going on around here. So it's interesting. So I think that you'll find that we're going to continue to have a strong market.
Louise Phillips Forbes, associate real estate broker over at Brown Harris Stevens. Coming up next, we're staying on costs. The chief agricultural economist at the Wells Fargo Agri-Food Institute joins us next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow remains lower. The S&P, NASDAQ, they're both higher. NASDAQ 100 index as well. Right now, the S&P is up 40, 75.14 where we stand. Could see a record close today. We're up by about 0.5%. The Dow, though, however, does remain stuck in the red. Dow Industrials down now by about 0.4%. NASDAQ is surging up 269, up 1.1%. NASDAQ 100 index full of those big tech names doing a lot better. It is up by 1.6%. The Russell 2000 index of small cap shares is also advancing, up now by 1.6%. The VIX right around 17 with the 10-year at 4.49%, the 2-year 4.04%, and the 30-year 5.02%. Gold at $44.96 the ounce. Spot gold down 1.6%. West Texas Intermediate crude oil down almost 3%. $93.75 for a barrel of WTI. Interesting day for crude because we got Brent, the global benchmark, holding below $100 right now at $99.45, but a barrel of Brent is trading higher by 3.4%. Sources tell Bloomberg Qualcomm has reached a deal with TikTok owner ByteDance to supply chips for AI data centers. Qualcomm shares, they're climbing higher now by 3.1%. Again, recapping, the Dow lower, the S&P 500 index advancing now by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. Alex and Tim, that is a Bloomberg Business Flash.
Hey, thanks, Charlie, for that update. Here's an interesting story that you could have missed last week. We know farmers worldwide have been under pressure due to the Iran war. It's disrupted supplies of conventional nitrogen fertilizer. It's forcing these farmers to improvise ahead of this crucial fall planting seasons. One of the ways they're improvising is actually using human urine as a fertilizer. 2P Organics is a French startup. This was in Bloomberg News last week. It converts human urine collected from schools and festivals into a bacteria feed that helps plants grow. The Bloomberg News piece also said that since late February, sales have jumped about a quarter for the product. There is no end in sight to rival U.S. and Iranian blockades in Hormuz. Fertilizer disruptions are expected to persist. A prolonged conflict could mean weaker harvests and higher grocery prices. This is what Dr. Michael Swanson looks at. This is his specialty. He's chief agricultural economist at the Wells Fargo Agri-Food Institute. He joins us from Maryland. Dr. Swanson, good to have you on the program. The disruptions that we've seen as a result of on fertilizer, as a result of the war in Iran, the Strait of Hormuz closure. We spoke at the top of our program about what an open Strait of Hormuz could look like and when that could happen. Hint, we're still no closer than we were 3 days ago, is what our Bloomberg News team says. Chris Kennedy over at Bloomberg Economics. If the Strait were to open, how quickly would we then see fertilizer prices drop and that actually hit worldwide agriculture?
You know, it's interesting. The prices would drop quickly, even though the supply itself would be delayed behind it. But these are markets that are always looking forward. So the same thing that drove them up quicker than the product disruption would take the prices down faster than the product actually arriving to the markets.
Dr. Swanson, one of the themes that we've been talking about a lot is this idea that consumers are trading down on certain items. They're trading down on staples, but splurging, for example, on certain categories. Where are you seeing this when it comes to food trends?
You know, it's interesting. You can see it clearly in the protein space. I mean, when you look at the value of chicken and pork relative to beef right now, clearly it's really bidding up that demand in a big way. But on the flip side, when you look in the beverage categories, some of the probiotic soft drink replacements, they are super premium pricing, but they're not finding any problem looking for good demand. They have plenty of product demand, even at that super premium pricing.
You know what I noticed over the weekend? I was buying some chicken and it said 20 grams of protein per serving on it. And I'm thinking to myself, is this a result of the protein craze coming from GLP-1s that, you know, even foods that have had the same protein content in them for generations, like forever, are now advertising that protein because that's what at least American consumers want to see?
That's exactly what you're seeing. So we're seeing across every single category. If you have a protein component, you're going to highlight that first on your packaging. And it's interesting how packaging really responds to that question that's on the consumer's mind. But you're exactly right. This is something that's going to continue and it's going to be very prominent. I think you're going to see it clearly in every single category.
Is this protein craze, is it like other food crazes in the past where we've seen people, you know, consumers are fickle and Americans are fickle when it comes to sort of what we follow? Or is this protein craze here to stay?
You know, it's a great question, and it's here to stay. I mean, you and I can all name diets that have come and go, paleo, Atkins, things like that. But when you're talking about medicine that's going to be prescribed, it's going to be the new statin. When you think about it, there's like 90 million prescriptions for statins out there right now. This is going to be the new statins. And since Americans are pretty good at taking their pills, this is going to be one that's going to stick around. This is not a fad that's going to walk away. It's going to be here for a long time.
Consumers are very much feeling the sticker shock of prices when they go to the grocery store, even as some agricultural commodity prices have actually come down. At what point do consumers feel some of that relief in the stores?
You know, it depends on the category. Take eggs, for example. Last year's highly pathogenic avian influenza was just an enormous shock. But we're actually below the price starting that cycle right now. But we're not seeing consumers really take away a lot more eggs, even at these really low prices. So it takes an awful lot to shake an American out of his particular diet that they really like. But we will see some relief as for example, the dairy industry right now, they're chasing more cows to produce more beef, which means more milk. So we're seeing good dairy pricing as well. So the consumer does have some opportunities if they're willing to look for them.
As we head into the summer months, are there any categories in food that might see inflation pick up? Any that you're expecting for it to be worse than others?
You know, right now what we're seeing is a little bit in the vegetable and fruit category. We started out the year with a tough spot with the freeze in Florida, which really put up the price of tomatoes. And we're going to have to wait to see what happens with the labor, with the transportation costs, because diesel is a major cost for moving it around the country and bringing it into the country. So probably fruits and vegetables will probably be the most pressure thanks to the recent events we've seen.
So my same question to you about fertilizer has to do with diesel prices. If the Strait does open and diesel prices come down, will we stop seeing those price increases in fruits and vegetables?
You know, probably not, because the bigger driver is going to be that long-term availability of wages. And wage inflation is probably still running at a 3-4% range right now. So diesel would be a nice relief factor. Don't get me wrong on that. But the wages are going to be a bigger piece of it for the longer term. And once they go up, they almost never come down.
What about our farmers, Michael? There is a disconnect between how much farmers are earning and how much consumers are paying. Are American farmers getting squeezed right now as grocery bills remain elevated?
You know, it's a great question. It really is farmer by farmer. You know, when we look at the micro data that we have, last year we saw some amazingly good returns in the same year as very bad returns. And I think what really driving a lot of it is the technology. What we're hearing from the farmers is technological change is so rapid and so difficult, they're having a hard time implementing it if they're not on top of it. So yeah, we're seeing some squeeze. It'd be nice for them to get some price relief from the higher crop prices, which would be inflationary, or lower input prices, which would be great. But what's not going away is the vice of technological change, which is just really putting them in a tough spot.
You mentioned the rising prices of protein. The story in the Washington Post over the weekend got my attention about how the Texas barbecue industry is struggling due to rising meat prices, the cost of brisket increasing 28% over the past year. Imports coming from outside the United States, I mean, that is what an import is. Is that going to put a dent in rising beef prices?
Not really for that type of a category. So grind that goes into hamburger, absolutely. This industry has discovered that Brazil is a gold mine of hamburger, and they're going to mine it for the foreseeable future. But when it comes to identifiable cuts, steaks and brisket, things like that, no, we don't really have another source because we want a certain quality. So this industry is pretty bullish right now about their ability to keep prices high. And it usually is a sign that things will change when they think nothing will change.
Michael, going to have to leave it there, but this was a great chat. You got to come back soon. We appreciate you taking the time. Michael Swanson, Chief Agriculture Economist at the Wells Fargo Agri-Food Institute, joining us from Minneapolis this afternoon. We are a little over an hour from the close of equity trading. The Dow is lower right now by 0.4%. The S&P 500 at a new record. We'll see if it closes at a new record today, up 0.5 percentage point. The NASDAQ Composite up close to 1 full percentage point. Coming up next on Bloomberg Businessweek Daily, we are taking a look at stocks on the move. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Businessweek Daily. That is Alexandra Semenova. She is in for Carol Masser this afternoon. In fact, Carol out all week. Alex, I got to tell you, kind of feels like a Monday.
It does. And a lot of people aren't excited about coming back to work after a long weekend. But
where are you getting this data?
I can't speak for you, Tim, but stocks are at record highs. We get to hang out for 3 hours.
I was running to the subway this morning.
I'm very excited to be here.
I am excited to be here too. I'm excited you're joining us. Are you with us any other time this week? Or is
Unfortunately not.
This is
maybe.
Okay,
this is all
maybe.
we get. So we have to make the most of it.
Okay, maybe. Well, we got 2 more hours with Alex coming up on Bloomberg Businessweek Daily on radio, YouTube, Bloomberg Originals, if you are sticking with us. In the meantime, the S&P 500 at a new record right now, up 0.5 percentage point. The Dow, which I'm told is celebrating a birthday today. Did you hear this?
It's 130th birthday.
Okay.
That is thanks to Katie Greifeld.
Happy birthday.
Happy birthday to the Dow.
Okay, so we got that. The NASDAQ Composite up close to a percentage point. I'm Tim Stenovec, along with Alexandra Semenova. Let's take a look at some stocks on the move today. We are joined by Bloomberg News equities reporter Natalia Konijevich. Natalia, what are you watching?
Hi, guys. Yes, stocks are at record high, but nevertheless, I found one big decliner. This is the worst performing stock in the S&P 500 today, which is AutoZone. The ticker is AZO. The stock is down by 11%. So this is the company that sells different parts for used cars or trucks. So it has commercial segment, which is doing well, and also consumer segment. This is so-called do-it-yourself or DIY. So this is where the biggest issue is. Comparable sales missed expectations. On the one hand, analysts were saying that, yes, we have higher oil prices, loans for new cars are still, rates are high. So maybe that could boost demand for different, parts of cars when people want to maintain existing cars. But even that is not happening. K-shaped recovery, guys, as you discussed on the show earlier, because as of now, people prefer just to wait and see, and they I'm one of those people, actually, because I did the maintenance for a car recently, and I was told, you got to replace this and this. I was like, can I still drive a car? They said, yes, I'm fine. They
send you videos now, too, to prove, what you need.
Yeah.
Have you seen those? Yeah, they send you videos, too. I will say, on AutoZone, I was driving a few weeks ago in, a rainstorm. The windshield wiper flew off of the car.
Oh, my goodness.
Okay. Yeah, I know. I didn't know that could happen. There was an AutoZone nearby.
Yeah.
We went to the AutoZone, and the guy, I got a new windshield wiper, and he offered to install it for completely free in the middle of a rainstorm. Very nice of him.
They have a very nice jingle on their commercial. I'm not going to try and sing it.
Yeah, I don't know if we have the rights to it. Yeah. So, you got to be careful. Okay, AutoZone. Micron is another one you're watching.
Micron, yes. So this is the best performing stock today. Shares are up by 20%, guys. The ticker is MU. We saw a pretty big upgrade coming from UBS analysts. So now they raised price target to $1,625. This is almost a 200% increase from a previous target of $535. And that also implies a market cap of about $1 $1.8 trillion. So everyone is very optimistic on memory chips stocks. And we saw from the last earnings report that Micron said we have to spend heavily on AI. CapEx for this fiscal year is expected to be at about $25 billion, more than analysts expected. What I found really interesting, guys, if you go to ANR function on Bloomberg Terminal, you see that, yes, we have 65 analysts tracking the stock, 0 sell ratings. At the same time, we see that the average price target for this year is 685. The stock is trading at 900 today.
You would think that is a contrarian indicator when no analyst is bearish on a stock.
Yeah, and they're so behind. So we will see potentially more upgrades.
Okay, that's Micron. Another stock, well, this one making big moves today. Redwire. So this is one of the space stocks. I'm sure we will be talking a lot about space economy, space stocks today. So the ticker for this one is RDW. Shares are up by almost 27%. So this stock is just one of the space stocks that is rallying today. Of course, we saw SpaceX filing for an IPO. We saw launch of its biggest, spaceship. And then also, everyone is just watching right now if Elon Musk implements whatever he's saying about building data centers in space, how or when it's going to impact the whole sector. It's going to be really fascinating. Yeah, the data centers in space thing is like, I got to see it to believe it.
Yeah.
It's just one of those things that is still, in my mind, seems far away, but I'm not a rocket scientist.
That doesn't seem to matter to investors. They don't have to see anything to believe it. They'll hear a nice number and they're buying.
I spoke actually with a couple space experts. I was thinking about a story about data centers and what's going to happen with data centers on Earth. So they said that basically it's just so much cheaper from the energy perspective. But yes, logistics part is hard, but SpaceX is basically, it has a monopoly. And it's pretty, it's not completely impossible to do that. It's just a matter of time.
I just have to use my imagination, I guess. Natalia Konijevic, Bloomberg News equities reporter with today's Stock Movers. For more conversations like this, check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Check out Stock Movers on Apple, Spotify, or anywhere you get your podcasts.